Hey guys, SGT here, and I'm really glad to have on the phone Jeff Nielsen and Brian Boudelier of Bullion Bulls Canada. Welcome, guys.
Thanks, Sean. It's a pleasure to be back again.
Thanks for having us.
Hey, it's my pleasure. Now, we're going to do something a little bit different today, guys. We're going to talk a little bit about mining stocks. Now, before I go further, I do want to say, Jeff and Brian, I think that there's two different schools of thought out there right now. In one camp, you have guys like Bix Weir and Pastor Lindsey Williams, and to some degree, even Porter Stansberry saying, get out of paper assets. You can't trust them, and you need to get into physical assets like physical silver and gold, and you can't necessarily even trust the mining shares. And in the other camp, you have brilliant investors like John Embry and Eric Sprott who are saying take advantage of what we're going to see in the explosive price of silver and gold by taking advantage of the leverage available only through mining companies and mining shares. Jeff, what's your position on that?
Well, Sean, in addition to the argument put forth by John Embry and Eric Sprott regarding the leverage, which is certainly an argument that I favor myself, I also think there's a third consideration which people have to keep in mind, and that's the possibility of bullion confiscation by our governments. If you are worried that that might even be a faint possibility, then suddenly the idea of holding miners takes on a whole new perspective as possibly our only access to investments in this sector should our bullion be taken away from us.
That's a good point. You just wrote a new article in which you address confiscation, too. We should all read that.
Yeah, my latest piece is called The Great Gold Bait and Switch, and puts forth what I think is a fairly plausible argument as to how gold confiscation might take place in the U.S. in the future.
Okay, and I've tended to not dwell too much on the idea of gold confiscation or silver confiscation because it's really out of our hands. And so what I tell my viewers to do is to acquire physical precious metals on a regular basis, regardless of price, and you really can't spend all day worrying about confiscation because it is out of our hands. Now, to take that a step further as it relates to mining shares, what are the chances that in the event of confiscation that the U.S. government could just nationalize mines, or the Mexican government or the Canadian government could just start nationalizing mines? Then what happens?
Well, of course, as you say, you can only sort of prepare for so many scenarios. And in fact, what we've already seen are some governments looking to seize, pension assets and things like that. So, there's no absolute guarantee as far as, confiscation goes, what might be taken. So this is basically why we try to hedge our bets as ourselves as investors by holding both bullion and the miners, and, try not to give either side of that equation too much favoritism in terms of our long-term perspective.
Sure.
I'm not investing from a fear position. I'm investing from a value position. All I can do is pick opportunities that present themselves now and plan accordingly. How can we try to figure out every way that things are going to go wrong and then do the opposite? I think it's going to be pretty confusing.
Absolutely. I want to refer to an article that you guys have put together on Bullion Bulls Canada called The Bullion Bulls Basket. Now, in no way are we saying that these stocks that we might be discussing here are, top picks or picks that everybody should go out and buy tomorrow. I think everybody needs to do their own due diligence. But I think it's a great primer for people who are looking for juniors and want to get their feet wet to start doing further research. Could you guys talk a little bit about that article? Or maybe, Brian, you could tell us what you look for in a great junior. What types of things do you look for?
Okay, the things I look for when I'm screening a stock, the first thing is share structure. I just want to see a potent share structure, which means that the number of shares released by the company is somewhere between 100 and 150 million or less. And then if I've seen that already, then I'll wonder, and I'll go into the financials and see how much cash they have on hand, whether it's cash or cash equivalent, so that they can do what they plan on doing. Look at the corporate vision, figure out what they want to do as a company. Do they have the cash to do that? And then from there, what are they sitting on? Are they a junior explorer, junior producer, or an advancing company that's looking to produce and start to evaluate their prospects? And certainly that's where things get complicated and you need experience. But at least if you figured out the first three things I mentioned, then you're sitting on a decently structured company, and your chances of picking something that's going to work are better, because a company can sit on really good lands and have really good prospects and never have the cash to get there, or have such a diluted share structure that even if they do get there, the shareholder won't benefit.
Now, on the picks that you've included in this recent article, among those picks, I see Pan American Silver, Colossus Minerals, Golden Minerals, Golden Hope Mines, and Fortuna silver mines.
Right, you got it.
What I want to address as it relates to your picks, and perhaps you have additional picks since you've done this research, what are some of your favorites, and are they all producing currently?
Okay, let's see. I looked down through, three of the five are. Pan Am's a large silver producer, producing in excess of 20 million ounces of silver at a fairly low cost if you factor in all the other minerals the zinc and the lead credits. Fortuna is attractive, lower share structure, cashed up company, if you will, 2 million ounces of silver a year. But the thing that's attractive is that they have quite high-grade silver, so they are efficient in their production. Colossus Minerals is not a producer currently. They're going to be producing in 2012, and they're sitting on a very potent high-grade deposit that hasn't been established yet. We don't know what the resource size is just yet. There are estimates out there, but bottom line is that it's a sleeper in terms of value. Although at $8 a share, a lot of folks have figured out that there's something there.
Okay.
Golden Minerals, let's see, that is a very potent share structure. They're a U.S. listed company on the Amex, and they are stuck with having to report only reserves, which means that they can't really tell you what kind of resource they have. They can't tell you, I think we have this. They can only say what they actually have, and it's about 50 million ounces. But they have a lot more property than that, and they have very, very low shares out. I think it was 15 or 20 million shares out. So the potential upside in terms of having such a low share structure is high. And I've seen that they're quite sensitive to silver. They're kind of misnamed Golden Minerals because they're really pretty silver heavy, but
sure.
They're very sensitive to silver, a move in silver price. And then Golden Hope is a bit of a sleeper if you want to keep going. Right now that's down in price. They're working a very long strike, 15 kilometers worth of an area that is moderate grade, somewhere between 2 and 3 grams a ton. And they've only explored a small amount of it, but they keep grinding along, keep proving up tonnage, and it looks like the value will be going up as they put out a compliant resource, which is a national instrument. They call it 43101. They haven't done that yet, and this year's the year they are projected to do so. And usually a company goes up in value quite a bit once they've done that. So those are some of the reasons.
This concludes Part 1. Click here for Part 2.